was great. Europe was great. For those people that don't know, I went to Germany and Poland. Was gone for a couple of weeks. I was live on your show, and then I was like just gone for 2 weeks, and then now I'm back.
You still own Palantir, right?
No, I don't.
Okay, I was gonna say congratulations to you too, brother.
I mean, even if I did, it wasn't a lot. So right. Is what it is. But to be honest, like I don't know why it keeps going up, and I don't want to short that shit. So I'm just gonna leave it alone.
Okay, real quick, here's what I'm gonna do for the report, guys. I use this platform for debate, so it'll be really easy. Here's the link right here. Everyone go to this website, speechdrop.net. That is the website. And then this is the code you need to enter in. Speechdrop.net, speechdrop.net. This is the code. I'm going to put it in the chat, and you can download the report immediately from this code. Let me know if it doesn't work. It should work, but everyone should be able to access. Don't tell the feds, because I could get in trouble for this. So don't tell
me. I think it'd be like a client of the bank or something, like one of the private clients in order to receive those reports, be subscribed to the services. I've always wondered how to get those, actually. Sometimes you see them, sometimes you don't.
Yeah, so don't tell anyone. Don't tell anyone. Just keep it with yourself, and don't post it anywhere. So there you go. That's the code, speechdrop.net. All right, Sam. We got a lot of stuff to talk about, a lot of stocks, new bank. But first of all, your reaction to this 3-day level of volatility and the reversal we saw today.
So, I mean, to be honest, before the Fed came on, I wasn't so bullish the market. I've said on Twitter a couple of times that I'm like trimming, things that have ran a lot, things that are extended, short-term plays, and so on. And it's not like I'm trying to time it or anything, but it's just there was a lot of euphoria in the market. You were seeing some names continuing to run for probably companies that people don't even know too much about. And as far as the RSI goes, it's very extended from a technical perspective. And I thought the market was, or the bond market was pricing in longer for higher or less cuts for 2025. The dollar was at yearly highs around 107 at the time. And this was before the meeting last Wednesday. And, I took that opportunity to continue to build the cash position, which I have been for the last couple of months. And then everything pretty much just fell on Wednesday. I didn't buy any dips.
Well, what was your reaction emotionally when it fell? How did you think of it? Were you scared at all, or?
No, not really. It was kind of expected. And to be honest, like we were still green for the month, so it wasn't really a big deal on Wednesday. But then, it became a lot bigger. And then yesterday, didn't really see a bounce, saw it getting faded. I think I bought like some shares of some software stock, but I didn't really buy it too heavy or anything. And then this morning, when I saw the PCE come out, I mean, those numbers look good. They look like it was the opposite narrative. And the PCE is what the Fed looks at, right? They don't really look at CPI. They don't really look at PPI. Like what Roy is saying, it was definitely overdue. And then the PCE numbers come out this morning, and it was actually cool numbers. So why was the market down? I don't know. But the RSI for SPY was at like 20 something, which hasn't been for a while. I don't like
we got to extreme fear, right?
Yeah, it was. I mean, I don't like to focus on that CNN because that's more of a technical indicator, not so much of a survey. Like they got many other surveys. Like they got the AAI sentiment survey, which I look at every single week. They got the NAIM index, which is basically how long hedge funds or people who join the survey are long, and that dropped like 20%. People were a lot less bullish. People were more uncertain on the AAI sentiment survey. Of course, you see this, but what I look more in this is the put call ratio that came to like pretty much a pretty high amount of puts versus calls yesterday.
So essentially, you felt this pullback was overdue. We needed a little bit of a breather. And
because people just got used to the market going up every day, and people forget like the market can go down just as many days as it goes up, but people forgot about that. And then you had every single seasonality effect didn't happen. You had bearish months like October was a bearish month, September was a bearish month, August, everyone thought that was going to be a bad month. It was not a bad month. October was pretty much a flat month. And then we just needed it. And I always thought, I wonder what it'll be like if the market was red for the most bullish month of the entire year.
Yeah.
We'll see.
No, that's and that's another signal to kind of think why we likely weren't going to stay red.
But that was mostly sentiment. But I mean, honestly, the biggest thing for me was that if the CFTC futures positioning on the NASDAQ or NQ futures, it was like max bullish.
Yeah.
The most amount of people has been bullish in a long time. So it was going to happen at some point. You just needed a catalyst.
Yeah. No, I agree. And so, no, I think a lot of that makes sense. You needed a catalyst. You probably needed a little bit of a pullback as well. 2 versus 3 cuts. I don't know if that was the best reason for a pullback, but we got it. And we got a reversal from that pre-market low that we made this morning. I want to talk about Nubank to get started. A lot of people in my community have been asking about this stock. It has been sold off pretty aggressively. By the way, guys, Sam on Twitter, this is his Twitter. Please make sure to follow him there to get more updates on his DD. You've been building position. You're bullish. 2 questions to start off. Why has Nubank been taking a hit? And then second of all, what's your thesis on the company?
Well, I've been long Nubank since it was around $7, actually. Took a little bit off the top when it was in the 14s or 15s. And of course, saw it continue to go and was like regretting it a little bit, but whatever. Yeah, held out. I did add a considerable amount to my position on August 5th when it dropped down to where we are today. And, the company is just firing on all cylinders. Like they're doing amazing. They're doing a lot of good acquisitions, expanding globally. And there's the net interest margin has just been increasing. Well, not increasing. Sorry. The net interest income has been increasing every single quarter. The net interest margin kind of took a little bit of a hit last quarter. But, there's 2 things. One, Nubank was near its all-time high around 16 plus prior to the earnings. And then when the earnings came out, they had a few things last quarter that was probably kind of signaling maybe a yellow light for the market in terms of their growth and expansion, which I don't necessarily disagree with because for one thing, a lot of what the analysts were really looking at was the fact that it had its sequential decline of net interest margin from 19.8% to 18.4%. And the reason why that's important is because the net interest income is basically how much the bank makes from its spread between the rates it gives out for its deposits. I'm sorry, for its loans and credit portfolio versus its deposits. And that margin ticked down by about a point, 140 basis points last quarter. The 90-day plus non-performing loans for Brazil ticked up again, and it has been ticking up for a while. And it's always been analyst concerns about that one. It was like, actually, this was their second sequential quarter decrease when it comes to their average revenue per acquired customer. That dropped down another 20 cents. Overall, I think the story is that you have a very fast growing digital bank in very fast growing regions, and people believe the growth is starting to slow down. So they start to sell off a little bit, but then, inflation has been a bit sticky for Brazil. And they've been battling inflation for years, but it has ticked up and re-accelerated from the decelerating path it's been taking. So the Central Bank of Brazil actually had to hike up their rates to 14.25%. Now that's a lot, but when you're dealing with rampant inflation like they are in Latin America for a very hot, fast-growing nation, you got to kind of keep rates that high. There's probably a little bit more than that than I actually know when it comes to monetary policy in Brazil. But then on top of that, the government was really spending a lot of money, kind of like what we were dealing with in late 2023 and early 2024. And, remember earlier in the year, inflation was kind of coming back a little bit. The market was getting scared. The government was spending a lot, blah, blah, blah. And what had happened recently was that the Brazilian currency has been dropping like a rock for the last few months. So you have the fundamentals of the company starting to look a little bit weak, and then you have the macro taking much bigger effect. That's going to basically pull everything in Brazil down, and that's what you really saw with Nubank and MercadoLibre.
So is Nubank cheap?
I would say they're actually pretty cheap right now. So they're trading right now in 2025 forward PE. They're trading at about 18 times. On a historical basis, their forward PE is somewhere around 27 times. So you have about a 50% upside here in terms of getting to the average TTM or average trailing price to earnings, which would be about 27. So about 210.4 it is today. So maybe it's going to go back to all-time highs or something a year from now. I would say that is my base price target. My bullish thesis, I think it can get to around 20 by the end of next year. And that's only because, 2 things have to happen. One, they need to continue to re-accelerate their RPAC. They need to re-increase that RPAC, because the reason why I decreased last quarter was because the large expansion they've been doing in Colombia and Mexico, which is their fastest growing regions they have. Brazil is, of course, most of their revenue, but a lot of revenue is really showing up in those other two countries. If that comes back, then that's going to bring investors back. If their net interest margin ticks up a little bit, which is going to actually be good, meaning that they make more interest versus the revenue. The problem is the revenue is increasing so fast, so it's very hard for them to keep up with that. But overall, a lot of the RPAC, or the average revenue per acquired customer, that actually is calculated based on the average a month per user, and they've acquired a lot of people from Colombia and Mexico in the last couple of quarters. So it's understandable why this is going to tick down. And then also the net interest income, that ticked down a little bit as far as its growth goes, because of their quick expansion happening. So I think that what's going on in Brazil might be a little bit of a scare. I don't think Brazil is heading toward a manufactured recession. But of course, when macro is in its scariest point, that's the best time to buy. Nubank, on a technical basis, dude, it's trading below all of its moving averages. Trading pretty cheaply. Its daily RSI is at 25, its weekly RSI is at 36, its monthly RSI is at 49. It's been flying high for a while, so you kind of needed this pullback. We are kind of basing out around here, but honestly, man, this is probably one of the best deals in the market that I can see for myself. Of course, there is risk with this versus MercadoLibre. MercadoLibre is more established, is more diverse. They make money from other segments and revenues. Nubank is really just loaning out in the credit portfolio. They did tighten a bit on their credit portfolio recently because their customers actually improved their credit situation. So if people's credit is actually better, they're not going to charge that much for its interest rate. So, overall, I think it just takes time for something like this to play out. But
if anyone has any questions in the chat for Nubank, you can put them now. But what is the difference between this and SoFi to you?
Well, SoFi is mostly in the US. It's a very competitive area to grow.
Let me rephrase. Why are you buying Nubank over SoFi?
Well, it really depends on your risk level, right? So I think SoFi has a large trajectory ahead of it, but it is a US bank, so it's very competitive. Nubank is in regions that people have never had a bank, like Mexico. Almost everyone there just was never banked, right? So Nubank is coming in and they're penetrating probably 10, 20, 30, 40% of the market. But there's a lot more to go because Mexico is growing pretty quickly in terms of population size. And then you have Colombia as well. So it's Nubank is more of an international emerging market play. I would say SoFi is more of a US growth play. And also the fact that the credit portfolio of a lot of Americans is actually going to be getting better versus worse as interest rates come down. So there is that leverage that SoFi can have. I honestly think that if I had to be in the US and bet in a digital bank, it would be SoFi. But I'm looking for that alpha in emerging markets right now, because I do think there might be a little bit of an outperformance for emerging markets versus US markets, because the past 10 years, US markets have been outperforming all of them. So I think, just a little bit of money flows coming into emerging markets, it might happen. There you go, man. Mopar for life. What is a bank? No one knows out there.
This question right here, I think, is more based on SoFi. It's less about SoFi.
I don't think SoFi is going to do that. At least not yet. And if they do, it's not going to be emerging markets probably, because there's a lot of risk there. And you got to deal with getting all the licenses and all that stuff. It's like, does SoFi really want to do that right now? Probably not.
Another question on Nubank is, how do you feel about their management? Can you trust these guys?
Yeah, I could trust them. I mean, they've been doing very well. David Velez, he's been there since pretty much the beginning, founder led. That guy actually went to one of the Ivy League schools out here, and
Stanford, right?
Yeah, and it's actually pretty funny because I remember when I was talking to TJ a lot, and I was on his podcast a lot. His wife actually was friends with David Velez.
I know he doesn't like him.
Yeah, he doesn't like him. So it kind of deterred me. I'm not gonna lie, but I didn't really know much about Nubank then, and there's a much different mindset back then. But I decided to switch from SoFi to Nubank at that time, and obviously today, SoFi's outperformed Nubank, but for quite some time, it was really Nubank. But I want to really compare the two because they're not directly competing with each other. In fact, I would even say they're not really competing with each other because they're in different regions.
What about Buffett? He still owns this, right?
Yeah, he still owns Nubank. I mean, that guy's buying more Occidental. So I can't really judge a guy because he's the GOAT. So like, I see a lot of people on Twitter, they're really judging him for selling Apple and buying Oxy. But I mean, I'm pretty sure the guy knows what he's doing, right? Like he knows what he's doing.
People are getting too cocky, bro. People are getting too cocky.
No, they really are. They're getting too cocky about like thinking they're better than Buffett and stuff. It's like, no, that guy's the GOAT. Like you can't touch him.
Yeah, it's like he definitely, you could argue, trimmed Apple quickly because he's not reallocating the capital anywhere else. And I don't know if Apple's going back to 170, but I mean, he's managing a lot of money and he's probably going to put that money somewhere else.
Also, he runs multiple insurance companies. I mean, for the most part, they are an insurance company. So insurance companies have to hedge by having a lot of cash in the balance sheet to minimize the risk.
Correct.
So, I mean, you can't not like, why do you think he has a big cash position? That's probably one of the reasons why. I don't think he's getting ready for a monster crash. I think, well, he has one where he doesn't like to buy anything that's not in sale. If he doesn't see a sale, he doesn't buy anything. But also, yeah, he's an insurance company. So he has to have that money there and he's earning so much interest on it. So like, what's the point?
Okay, so let's talk about the next one in the emerging markets that you like, which is Amazon of Latin America, MercadoLibre. When did you start buying this and what's your thesis?
I was buying this when it was down like the 1100s. I didn't buy fast enough. I wish I did because I was DCing at the time. So my average is like somewhere around 12 or 13. I forget. But there were points, especially after a few quarters ago when they dropped all the way down to 1300, I was selling puts on them. And man, those premiums are crazy, but they all were great. And I don't really like to do it publicly, but I do have an adjusted cost basis that I calculate against my actual cost basis. So my adjusted cost basis on this, based on the premiums that I've collected from selling those put credit spreads on it when it was down pretty low, I would say my average is probably below 1,000. But yeah, this is a pretty big position for me. I know a lot of people who've been buying this when it was below 1,000 in 2022. I also know some people who have owned this since like it was 300 or 400. There was like a lot of talk. Yeah, go ahead.
Year to date, it is massively underperformed the S&P. So what's the thesis that you're looking at here?
So it is the thesis is, I mean, they're also in digital banking as well. They're more on the credit card side and loan portfolio side. They do focus. I mean, they have a lot of, they have their hands in like over 8 Latin American countries. And one of them is Argentina. So they are impacted by Argentina. But Argentina is, I don't know if you've ever, you ever heard of, why do I keep forgetting the guy's first name? Javier Milei?
Oh yeah, of course.
Yeah. Dude, that guy he has this podcast with Lex Friedman and he is very, the word isn't intellectual, but he has studied American pioneers in finance for a long time. And there was the John something. There's the guy who wrote like what? Huh? No, not Rockefeller. There was a guy who wrote that book. It wasn't John Smith. I forget the guy's name, but he wrote that book in like the early 1800s or late 1700s. Like he really studied American capitalism.
Napoleon Hill? Napoleon Hill?
No. But he really studied American capitalism from the beginning, and I think he's playing by that playbook. I mean, you already see he's like chilling with Elon Musk, Trump, and everything. Like just that publicity already gives him that edge, and he has taken the massive debt to GDP that Argentina has had, and he's basically made them flat. Like, and he is increasing the GDP while at the same time cutting a lot of costs. Like, I don't know, man. The guy he's doing great out there, and just that sentiment's going to really spread around Latin America, in my opinion. I think there's a lot of potential. Nubank's not in Argentina, and when they were asked about going to Argentina, like they were thinking about it, but I don't think that's necessarily on the table. I think Nubank is more looking at expanding globally than anything, specifically in South Africa and also the Philippines as well. They did acquire a large stake in a company called Time Group, which has banks in both of those countries, and they are growing very quickly. So I could potentially see Nubank actually expand out of Latin America at some point.
MercadoLibre is in Argentina and other countries, correct?
Yeah, they're they're in pretty much almost every single country in Latin America. They're pretty well built. I would say between Nubank and MercadoLibre is definitely less risk than Nubank, because their credit portfolio is actually half of their company, but it is the fastest growing part. But they basically are Amazon where they were in 2015, 2016, when Amazon spent so much money building the entire logistics.
Okay, so let me
go
ask that. The reason Amazon became Amazon is because of a juicy cloud computing AWS.
Yes,
margins.
of course.
MercadoLibre is buying low, selling high. Those margins aren't the best. So where is their AWS coming from, if there is one?
Well, the thing is that MercadoLibre, they have a wide moat in Latin America. I mean, some people like they can buy from elsewhere, but MercadoLibre they can ship things very quickly out there. And for a competitor to come into Latin America and be able to compete against them, very difficult because they'd have to build that infrastructure. It's like somebody coming to the US or company trying to go to the US trying to take Amazon's market share in terms of their e-commerce. It's very hard to do. Amazon already built out the logistics. They can eat into their margins and still destroy the competition. MercadoLibre also, on top of their e-commerce, they also have a streaming platform as well. So they have the advertising as well. They have third-party sellers. They also have their first party as well.
So all of that is describing Amazon in Latin America. My question is, Amazon has really shitty margins. So why buy the Amazon of Latin America if they're not going to be as
well? They also have Mercado Pago. Mercado Pago is basically their it's their loaning business. Yeah, it's their fintech. They have loans. They're basically running a bank, but it's mostly focused on the credit portfolio. And they're in less risky. They're in less risky regions. In fact, their non-performing loans has actually gotten better since last quarter. Mostly because they're not in like very risky regions like Mexico. They are in Colombia, but like they're not as much. Like they're mostly centralized in Brazil. They're in Argentina. They're in a lot of other countries as well. But their presence in the entire continent is massive. That it doesn't really take a lot for them to be able to advertise to their existing customers and cross-sell products to be able to make more money off of them and keep them within the ecosystem. So they might not have.
Do you think financial services will grow to be a significant part of their business?
Yeah, it will. It's growing way faster than the e-commerce segment.
Okay, so then what about Amazon competition? Do you think they are competitors in that region?
I don't know. Kind of too early to tell. I mean, Amazon does have that presence on a global scale, but Amazon would have to build out logistics. They'd have to allocate resources out there. You know, they have to find people out there to hire. They'd have to hire the drivers. They're probably going to outsource their delivery services to another company. I wouldn't be surprised if Amazon, maybe they partner with MercadoLibre in terms of delivery services. We'll see. I mean, they don't have to necessarily compete with each other directly by selling the exact same products for cheaper or whatever it is. But at the same time, like, if you saw the interview with Jeff Bezos on CNBC with Andrew Sorkin, I think that was his last name, I forget. But that dude is not focused. He still does work at Amazon, but he's focused more on Blue Origin and their other ventures that they have versus trying to expand Amazon to other emerging markets regions. But they already they actually are expanding more in Asia as well as Europe. Are they really expanding that much into Latin America? I don't know. Maybe I must have missed something, but for them to actually become a huge competitor, yeah, no, you're trying to see the risks, which is understandable. It's always good to see the risks on certain.
And I don't know if they are. I just asked you. You're probably still trying to figure out the due diligence around this as well. But I'm just trying to figure out what's the exciting thing about them, because I get the TAM in the region. I get that they're one of the only real players. I get the financial services is growing, but again, with Amazon, there was something there. AWS that got everyone in. Like, is there something more than just a bank and an e-commerce company?
Well, Latin America, you'd have to be bullish Latin America in order for all this to come back. You'd have to come in with the expectation or with the assumption that inflation will actually continue decelerating in Latin America and GDP will continue growing, because Latin America is one of the fastest growing regions in the entire world, along with Southeast Asia as well. If Latin America becomes a major power around the entire world, it's just going to bring MercadoLibre with it, because it already dominates most of Latin America. And if you think of like, what is it to Amazon? Well, Amazon, it's not like America was growing at 20% plus GDP annually when Amazon was growing. Like that didn't happen. And also Amazon did go through these major recessions and major drawback periods. And, you know, when there was COVID, Latin America and Brazil got hit hard. Their stock market fell way more than ours did. And on top of that, the US dollar dominance is really playing a huge role in sucking liquidity out of the system for a lot of these other countries. If the US dollar pulls back to, I would say, like around the 104s, you could potentially see these emerging markets rally a lot, because that would mean that their currency actually gets stronger than the way it's been recently. And that would also mean that rates start to fall again. And that would also mean that it's going to be a very bullish sentiment for a lot of emerging markets when that happens, plus China too.
Yeah, no, that's fair. And again, those GDP growth rates are a bit higher. I mean, Dominican Republic, Argentina, all these are higher than the United States. So you definitely
this is just this year, but it's been growing pretty hot for a while. And that's the reason why inflation got pretty out of hand out there.
Do you think they're going to, our last question on this, do you think they're going to split their stock?
You know, I maybe not. I can't really tell. I mean, I know a few companies like Booking.com, like the CFO has talked publicly on there. We are never going to split our stock because we don't want to attract that kind of buyer. We want people who are in it for the long haul. So kind of like the Warren Buffett mindset with Berkshire. Yeah. MercadoLibre, I could see them potentially doing it only because they want to attract more investors. It'll definitely. Okay, so when you're talking about splitting, you're just talking about splitting on our exchange, which of course is where all the money is in the world. Yeah, I could see them splitting their stock. Not right now. It would be a terrible idea right now. But let's say things come back in Brazil. MercadoLibre is back in the 2200s, 2500s. They're firing at all cylinders, continuing to regrow and reaccelerate. I could see them doing maybe like a 10-1 split.
Yeah, I think it would just be easier to. I mean, when you were selling puts on this thing, dude, you had to have a lot of collateral.
Well, okay, I wasn't selling puts. I was selling put credit spreads, but still, they're pretty. The premium was pretty high, and I was selling them in the money when they were down. So my risk was a lot lower than the reward I was getting. So I would be selling like maybe $10 strike spreads on there, and it was in the money. So if it were to go up like 3%, I would go from selling maybe like $9 to gaining or buying it back at like $2.
Right.
And I would do these with a lot of them too. So it was pretty considerable how much premium I was getting from it. Given like if you sell like a $900 credit spread with a $10 difference in the strike prices, your max loss is $100, right?
Right.
So I think the problem you're dealing with is liquidity, but that's why you have to go like a week or two out. So then that way you get more volume, and it has to be somewhat close to the strike. So,
right. Got a couple more questions for you, Sam, but guys, we do have some breaking news. Mr. Jim Cramer says that Palantir is going to 100.
It's over. It's over.
I mean, this is like, it was such a good day. It was a great day, bro. Like it was a fun day. Like,
God damn.
Now, granted, Palantir has been withstanding Cramer for the past 8 months now, so I think we'll keep withstanding it. But there you go. I think we can withstand it.
That guy, he's like, oh, I don't want to say the
word. Why did he jump in at the Like, why? Just chill out.
He represents the retail crowd. That's just what he does, and he's trying to, you know, he's a celebrity icon for CNBC. He's going to say what people want to hear because he just cares about the ratings. He's not managing money anymore. He doesn't care. So, you know, he just wants the ratings.
Yeah. Okay. Grab is becoming exciting on my channel. I got to give you credit for introducing me, Chris, and the sort of Chris's Patreon community to it. I brought it to my community. I like the name, really love the management, really love the leadership, really love the growth potential. It's been a couple of weeks since we talked about Grab, kind of oscillating that $4.90 to $5 range. What are your current updated thoughts on it, and are you buying it here?
No, I'm just holding. I mean, I haven't really made any changes to my position. Am I going to add? I'll probably add if it closes that gap from the earnings, so that I bring it down to like 4.4, so maybe like a 10% drop from here.
Yeah.
Excuse me, 10% drop from here. But really, if you look at China, you look at all the other emerging markets, you look at Latin America, all that, they've been dropping. in light of the dollar rallying.
Right.
It's when the dollar pulls back, you will see these things come back. Until that happens, it might be continued downtrend. And I can't tell you when that's going to happen, but I will tell you that we're probably getting pretty close to the point where it might have a little bit of reversal, a little bit of pullback. People thought there was going to be a pullback when it's at 104. And I'm talking the US dollar. People thought it was going to pull back when it was at 104, and it pulled back to like 103, and then it just ripped up again. And you got to remember, when the dollar rises, all right, it's anticipation of the tariffs coming. And when you increase tariffs, that means that importers have to pay the US more money for those increased tariffs or taxes on their imports, which means that they need to sell more of their currency to buy US currency to pay for those tariffs. And the market will always try to front run that. So until we see any type of reprieve from that, I don't know when that's going to happen. But if Trump gives like an idea that he might not increase the tariffs that much, the dollar is going to come crumbling down. Rates are going to fall. The market might just go straight up after that.
Yeah, that could be a potential way this thing plays out as well. And I think just none of us know what the policy is going to look like in 2025. And that's why kind of the market's like, all right, we'll see if tariffs work or if they don't, and what's going to happen to the dollar from that.
Sure.
The fundamental thesis on Grab. So for people that haven't heard it articulated from you, you believe they are Southeast Asia's super app. Why do you think they're on the way to become a super app? And this question I got to sneak in there. Why isn't Tesla FSD going to ruin their ride hailing business? Because I get that question 1,000 times a day.
Well, I mean, yeah, I don't think the infrastructure is necessarily built out in these emerging markets in Southeast Asia, Singapore, Philippines, Thailand, Vietnam, all those places. The infrastructure is necessarily built out. It's much easier for Tesla to grow FSD and start robo-taxi in like China, where it's already built out, or where most of it's already built out. He already has a lot of data around there. I think they partnered with Baidu, basically the Google of China, to be able to use that data and leverage it to run FSD. There isn't really that much data captured out there in these other regions. So it's
that's a big point.
Yeah.
There is no FSD if you haven't captured the data in the region. And so for everyone that's scared about Tesla with Grab, it's like, if they're not in Singapore, Malaysia, Thailand, I mean, there's nothing to be afraid of.
Yeah, and also, I mean, I don't know if you know how governments necessarily work in a lot of these regions. Is that they're pretty corrupt, right? So they want the officials, they want that money, and they're gonna full on take advantage of Elon if he tries to go out there. So there might not be that much leverage he has in order to play that out there. And on top of that, is there really gonna be a lot of people using it out there? Like, can you really picture a lot of robo taxis getting through those huge crowds in Manila, the Philippines, or in Singapore, or in Bangkok? I don't know. That's pretty tough to navigate, in my opinion, even without FSD. So I would say good luck. But on top of that, I don't. Yeah, he hasn't even done robo taxi here yet. So
yeah,
I don't know if that's gonna happen for a while.
I just want everyone to hear this from you, because you're the guy who's really started buying Grab early. So I make, because every day I'm like, well, FSD's. I'm like, God, FSD is not real yet. Like, it's not. Robo taxis aren't real.
Right.
It's there, but it's not real. And I just came back from India. There's going to be no FSD in India, and there's probably not going to be it in Vietnam.
No, like the streets are so crowded, the computer's not gonna. It's gonna be like, I can't move anywhere. There's Indians everywhere.
Yeah. Okay. The fintech financial services part of the business for Grab. Why are you excited about that?
So that one's a pretty good one. I mean, you have the super app, the fact they're putting everything on one app. So it's not just fintech where it comes to people banking with them and then taking out loads of stuff. It's also the insurance segment. They've partnered, I've said it before, they've partnered with Chubb, which is underwriting all the insurance that they're doing. And they have a lot more products they could probably offer. But I would say the risk level when it comes to the average citizen in Southeast Asia versus like Latin America, I think the risk is much lower because people tend to save a lot out there. You're really hitting countries that are growing at a pretty fast rate, considerably, even against the depreciation of their currency against the US dollar.
Yep.
But again, this is the same story when it comes to the US dollar and the emerging markets thesis. If you think that emerging markets are going to have a great next few years, then there's a pretty good chance that these companies that surround there, as well as their GDP and as well as the growth in these other companies, will do very well for the next few years. You have to believe that. Because right now, the concentration of capital in the U.S. is everyone's only investing in the U.S. So if that money just starts to dissipate outside of the U.S., you're going to see a lot of these other markets rise.
Do you like that 6 billion of the 20 billion market cap is cash?
I mean, that is what it is. I don't think that's going to really go down too much. I mean, the liquidity in the system is going to increase. So I don't know if that money is really going to change too much. I think what we need to look at is the use of margin and leverage in the market. Like you already got the email from Robinhood, right? So those rates went down on the margin. You don't have to be using margin in order to see that email. You're going to get the email regardless. So if you have more people starting to use margin, you're basically creating liquidity from thin air. Right. And as rates continue to fall, which they're suspecting they're going to fall about 3 times next year, there's going to be more money added into the system just from thin air because of the fact that it's on margin. Right. And already you already know Robinhood has a lot of deposits and everything. So like, it's not like they need to, it's like the money, the money isn't technically coming out of nowhere. They are taking the risk for it, but like they have the deposits to cover that.
Well, and why do you think margin coming down is good for Grab?
No, margin increasing is good for markets all around. So you're asking me about the $6 billion in treasuries, right? Oh wait, I'm sorry.
I'm talking about
that's
Grab.
what you're asking. Okay, you're talking about no. Why is that?
Good? I'm talking about Grab. No, Grab themselves has 6 billion in cash on $20 billion market cap. So my question to you is, you're basically bought 40 cents of every share as cash. So my question is that something that's a nice cushion for you?
Well, I think it's more than 40 cents. It's like a third of their market cap.
Yeah.
So you're buying like $2 of cash. That's really good. And actually, it's funny because
oh, you're right. No, I did the math wrong. Yeah, you're right.
No, their market cap's like 18 billion right now. So they're already buying back stocks. I think they have about $500 million left to buy back. So they're going to keep on buying, and they're probably
$1.47 of every share is cash. This is another I love buying these types of dude. I did that with not with Pound. I did that with Robinhood in particular when the market cap was 8 billion, 6 billion was cash. Any upside on the business is going to get a bigger premium.
Pretty much. And I mean, they're doing buybacks. They have a lot of money left in their balance sheet. You have the FX Singapore dollar because they report in Singapore currency and they converted the US dollars in order to give the US report because they're on the NASDAQ. When that dollar comes back, not if it will, it will. That is when the stock is probably going to take off. And I'm not going to like time it exactly. I'm not preparing for it, whatever. I already have my position. I'm just saying that there's a lot of money flow being tightened outside of the US markets. And when that does happen, then you're going to see it come back. Look, it already pulled back today.
What level
do you want above 108 today?
You want to see it come down to below 100 for this too?
No, it's probably not going to. It'll probably be more of a technical bounce than anything. And we've already seen rates kind of base out a little bit from the massive drop that it had, or from the massive rise in rates that we saw after Powell made his commentary. So it's possible we might get a little pullback. We might get a Santa Claus rally into next year. They already talked about increasing the debt ceiling, right? So
right.
It kind of sets up a bullish landscape.
All right, Sam. There you go. Thank you for joining. We wanted to know about Nubank MELI. People continue to want to know about Grab. I think it's getting kind of obvious. I mean, $1.47 of every $5 is cash. Company's growing. They're profitable. Buying back shares. Free cash flow margins. Anthony Tan is a rock star. You should have told me this at $3, bro. I thought you were a friend. You didn't.
I was telling everyone at $3. No one listened to me.
Well, that's why you're up on this.
Yeah, no, it's all good, dude. It's all good. I don't think anyone's missed it, to be honest. Like I feel like it's more of a long-term play. I don't think you're gonna see that like double in a week. And not a lot of people are talking about it, which is actually good, right? Isn't it good that not many people are talking about it right now?
Yes.
When Wall Street starts talking about it, that's when like the cat's kind of out of the bag, but that's when it might make its appreciation. So
and they already did. You got some updates, some upgrades at $7 or $8. So Wall Street's already kind of getting ready.
There you go. Yeah, we'll see, man. We'll see. Let's just hope the dollar depreciates a little bit. That'll be good for everyone.
All right. There's Sam on Twitter. Check him out. Sam, enjoy your holidays. Appreciate you, brother. We'll talk to you next time.
Thanks a lot, man. Appreciate it.
See ya. All right. There you go. Shout out to Sam. Make sure everyone checks him out on Twitter if you want to get more updates on his DD. Sam is an awesome guy. I've known him for like the past couple months now. He's been helping Chris with all of his Patreon stuff. So yeah, dude, I mean, I really didn't even calculate the math correctly. 30% of every, of the share price is cash. I thought it was 40 cents. So I was doing like I was doing like 6% or 10% at 30%. Yeah, you get $1.47 off of $5. That's cash. It's not bad. Not bad. They just got to continue profitability, free cash flows, EBITDA margins increasing. And, this one might be able to play out. All right. We're going to end out with Palantir. I'll give a call to Steve. I'll see if he picks up. I don't know if he will be able to because, again, he's been in meetings all day. But Palantir down a little bit after hours, $79.98, $80.55 is what we have the close on. And yeah, I mean, look, we got 80. You've got a decent amount on Twitter decent amount of people that are still upset that we're at 80. But it's fun, dude. It is very fun. Look, does the valuation really get justified here? Probably not. 183 billion is a lot to be paying, obviously, for Palantir. But based on what UBS said, and again, I'll be going through that update and putting out a video soon about the entire report. It looks like, this is so interesting, right? Literally the first line of the report is like, we know it's expensive. We get it. Like, that's literally the first line of the report. Basically, they're like, we get it. It's up there. It's expensive. But